Everyone is looking for a safe place to park their cash right now. The headlines are starting to look a little shaky. You've probably noticed the tension in the markets lately. Some people say the big 2026 crash is already baked in. Whether it happens tomorrow or 6 months from now, you need a plan. We're looking at three main options today: stocks, Bitcoin, and silver. Each one handles a market downturn differently. Most people just follow the crowd. They buy what's popular and hope for the best. But hope isn't a financial strategy. Let's start with the stock market. For decades, the S&P 500 has been the gold standard for growth. But look at the valuations right now. Do they actually make sense to you? Many analysts think we're seeing a massive bubble in tech. When the bubble pops, the drop is usually fast and painful. If you're heavy into stocks, a 2026 crash could wipe out years of gains. Is it worth the risk of staying in right now? Now, let's talk about Bitcoin. People call it digital gold. It's supposed to be the ultimate hedge against the traditional system, but Bitcoin is still incredibly volatile. In a panic, investors often sell their risky assets first. Does Bitcoin count as a safe haven yet, or will it crash harder than the stock market? It's a question that divides even the smartest investors. Then there's silver. It's the boring metal that's been around forever. Silver doesn't have a CEO or a balance sheet. It's just a physical asset you can hold in your hand. History shows that precious metals often move opposite to the dollar. When people lose faith in paper money, they run to metals. Silver is also used in almost every piece of technology we own. That industrial demand gives it a floor that Bitcoin doesn't have. But silver isn't exactly a get-rich-quick play. It's a defensive move. Which one of these fits your personality? Are you looking for growth or are you looking for protection? The answer changes depending on how much time you have. If you're retiring soon, a crash is your biggest enemy. If you're young, maybe you see it as a buying opportunity. But you still don't want to lose 50% of your net worth in a month. Think about where you were in the last major downturn. Did you have a plan then? Most people just watched their accounts bleed. They waited for a recovery that took years to arrive. You don't have to do that this time. Understanding the mechanics of a crash is the first step. It usually starts with a liquidity squeeze. Banks stop lending and everyone starts grabbing for cash. In that scenario, what do you think stays valuable? Liquidity is the lifeblood of the entire global economy. When it dries up, even the strongest companies start to struggle. Think about the stocks sitting in your brokerage account right now. Most of them are just digital entries on a screen. If the exchange freezes or the market halts, you're stuck. This is why some investors are moving toward physical assets. They want something that exists outside of a computer network. Silver fits that description perfectly. It's been used as money for thousands of years. But silver has a reputation for being the poor man's gold. Is that a fair assessment in 2026? Silver is actually much rarer than most people realize. It gets consumed in solar panels, electric vehicles, and medical devices. Once it's used in a circuit board, it's rarely recycled. That means the available supply is constantly shrinking. Stocks don't have that kind of physical limit. A company can always issue more shares and dilute your value. Bitcoin has a hard cap, which is why people love it. There will only ever be 21 million coins. That scarcity is what drives the price to those massive heights. But scarcity doesn't always equal safety during a panic. When the 2026 crash hits, people will need to pay their mortgages. They'll sell whatever they can to get liquid cash. We've seen Bitcoin drop 50% in a single weekend before. Could you handle that kind of swing while the rest of the world is panicking? It takes a lot of discipline to hold through a crash like that. Stocks are a different kind of beast. During a recession, corporate profits usually tank. If a company isn't making money, its stock price has nowhere to go but down. We are seeing a lot of debt on corporate balance sheets right now. High interest rates make that debt very expensive to service. If these companies can't refinance, they go under. That's how a market correction turns into a full-scale crash. Do you know which companies in your portfolio are carrying the most debt? It might be time to take a closer look at those numbers. A lot of people think the government will just print more money to save us. They've done it before, so why wouldn't they do it again? But printing money has a side effect called inflation. If the dollar loses value, your stocks might go up in price, but stay flat in value. You'd be running just to stay in the same place. This is the hidden trap of a debased currency. Bitcoin was specifically designed to fix this problem. It's an exit ramp from the traditional banking system. But the exit ramp can get very crowded very quickly. And the government doesn't exactly like competition for the dollar. Regulatory crackdowns are a constant threat for crypto holders. Silver doesn't face that same kind of regulatory pressure. No one is going to outlaw a metal used in every smartphone. It's an essential industrial commodity. That gives it a dual purpose that stocks and Bitcoin just don't have. So, how do you decide where to put your next $1,000? It really comes down to your timeline and your gut. If you believe the 2026 crash will be a short blip, stocks might be okay. But you have to be picking the winners, not just buying the index. Look for companies that provide things people actually need. Food, energy, and basic utilities usually hold up better in a storm. Tech stocks and luxury brands are usually the first to get hit. When money gets tight, nobody's buying a new high-end smartwatch. They're buying groceries and paying the heating bill. This is why defensive stocks are a favorite for cautious investors. But even defensive stocks can't escape a systemic market collapse. If the whole ship is sinking, every cabin goes underwater. That brings us back to the alternative assets. Bitcoin proponents argue that crypto is the ultimate lifeboat. They see it as a way to opt out of a failing financial structure. But you have to consider the infrastructure Bitcoin requires. You need the internet, a power grid, and a working exchange. In a true catastrophic crash, those things aren't always guaranteed. Silver is different because it doesn't require a battery to have value. You can put a silver coin in your pocket and walk away. It's the ultimate form of private wealth. But try buying a loaf of bread with a silver bar at a grocery store. It's not exactly easy to spend in a modern economy. You'd likely have to sell it for cash first. And the spread between the buying and selling price can be high. This is the hidden cost of physical precious metals. You pay a premium to own it, and you take a hit when you sell it. Bitcoin has fees too, but they are usually much smaller, and you can send Bitcoin across the world in minutes. Moving $10,000 worth of silver is a physical chore. It's heavy, it's bulky, and it requires secure storage. Are you prepared to manage the logistics of physical metal? Some people prefer silver ETFs for this reason. It's like owning silver, but it sits in a brokerage account. Wait, doesn't that put you right back into the paper system? If the brokerage fails, your paper silver might disappear too. This is the dilemma every investor faces right now. Do you trust the institutions, or do you trust yourself? Most people say they trust themselves, but they keep their money in a bank. It's just more convenient that way. But convenience is a luxury you might not afford in 2026. Think about the last time you couldn't access your bank account. Even a short outage can cause a lot of stress. A market crash is like a permanent outage for many people. Prices stop being predictable. Panic sets in and logic goes out the window. This is when the smart money starts moving into position. They don't wait for the crash to happen. They prepare while everything still looks normal. Is your portfolio looking normal right now, or is it looking prepared? Being prepared usually means being diversified. But true diversification isn't just owning 10 different stocks. If all those stocks belong to the same sector, you aren't diversified. If all your assets are tied to the US dollar, you're at risk. The 2026 crash might not just be a market correction, it could be a currency event. When the value of the dollar drops, everything priced in dollars gets more expensive. This is why Bitcoin and silver are often grouped together. They are both seen as a hedge against a weakening dollar. But they react to the news in very different ways. Bitcoin reacts to hype, technology, and liquidity. Silver reacts to industrial demand and inflation. Which one do you trust more for the long haul? Some investors use a 60-40 split. 60% in safe, stable assets and 40% in growth. But in a crash, that safe 60% often disappears. Bond markets have been incredibly volatile lately. A bond is essentially just a promise from a government or corporation. What happens if they can't keep that promise? This is why counterparty risk is the phrase of the year. Counterparty risk is the chance that the person on the other side of your deal goes broke. With a stock, you have counterparty risk with the company. With a bank account, you have it with the bank. With physical silver, there is no counterparty. The value is in the metal itself. Bitcoin is similar as long as you hold your own private keys. If your Bitcoin is on an exchange, you're back to trusting a third party. Have we learned nothing from the exchange collapses of the past? Not your keys, not your coins, is a popular saying for a reason. It's about taking total responsibility for your wealth. That sounds great until you lose your password or your backup. There is a level of stress that comes with being your own bank. Are you ready for that kind of pressure? Most people find comfort in the traditional stock market. There are rules, regulations, and protections in place, but those protections can be overwhelmed in a systemic crisis. Think about the circuit breakers on the New York Stock Exchange. They are designed to stop the bleeding by pausing trade. But when the market reopens, the price usually keeps falling. You can't force people to buy something they no longer trust. Trust is the most valuable commodity in the world. Once it's gone, it's almost impossible to get back. In 2026, we might see a massive trust deficit. People will question the banks, the media, and the markets. In that environment, tangible assets usually win. Silver becomes more than just a metal. It becomes a store of value that people can see and touch. Stocks become just a reminder of what used to be. And Bitcoin becomes the ultimate gamble on the future of the internet. Which of these outcomes seems most likely to you? Look at the trends and decide for yourself. The clock is ticking toward a major shift in the global economy. Many experts are pointing to the fall of 2026 as a critical window. If the crash hits then, will you be holding the right assets? Let's look at a balanced approach to this uncertainty. A lot of professionals are moving toward a barbell strategy. This means holding extremely safe assets on one end. and high risk, high reward assets on the other. They avoid the middle ground because that's where the most damage happens. Physical silver sits firmly on the safe end of that barbell. It's your insurance policy against a total systemic failure. Bitcoin sits on the high risk end. It could go to zero or it could go to 1 million. Stocks are the tricky part of the equation right now. You have to be willing to cut your losses early if the trend turns. Don't fall in love with a company just because it performed well in the past. The winners of the last decade are rarely the winners of the next one. Think about the companies that thrived during the Great Depression. They were the ones providing the bare essentials. If you're staying in stocks, look for high dividends and low debt. Cash flow is king when the credit markets freeze up. But even cash loses its power if the currency is being devalued. This is why having a mix of all three might be the smartest move. A little bit of silver for peace of mind, a little bit of Bitcoin for the massive upside potential, and a core of solid cash-producing stocks. Does that sound like a plan you can actually stick to? The hardest part of a crash isn't the math, it's the emotions. Fear will make you want to sell at the exact bottom. Greed will make you want to buy at the exact top. You need to set your rules now while your head is clear. Decide at what price you will sell your stocks. Decide how much silver is enough to make you feel secure. And decide if you can stomach the Bitcoin roller coaster. The world won't end in 2026, but the financial landscape will change. The wealth won't disappear, it will just change hands. It will move from the hands of the panicked to the hands of the prepared. You've spent your life working for your money. Now is the time to make sure your money is working for you. Take a look at your bank account today. Ask yourself if you're comfortable with where every dollar is sitting. If the answer is no, you have time to make a move, but that window of time is getting smaller every single day. Don't wait for the evening news to tell you the crash has started. By then, the exits will already be blocked. The best time to build a lifeboat is when the sun is still shining. Watch the charts, keep your ears open, and stay grounded. Financial independence isn't about hitting the lottery. It's about making the right choices before the rest of the world catches on. Are you ready for what's coming next? The 2026 crash might be a disaster for some, but it could be your greatest opportunity. Make sure you're on the right side of the trade.